recording. All right. We all know that, with basics, everything has to start with your plan. Everything has to start with your trading plan. So y'all have to make sure you are following your trading plan, because that is what is going to compound your account and get you to actually build it, versus, trying to hold the trades and things like that. Now, because y'all having a lot of issues with like greed or holding too long or whatever, that's what's gonna help you, control that. Because once you start seeing, take profits consistently, and then you start seeing it grow, whether it's whatever you're going for per day, because you could be going for, $5 to $10 per day at the end of the week, whatever, an extra, $50, extra 200 for the month, whatever the goal is, make your goal, convert it into your pip goal, because you obviously know you have to know your pips. But have that all calculated, because that's what's gonna help you out. And one thing that I failed to realize, I know Josh was just talking about, not trading during consolidation and things like that, because you want to catch, a better move, an easier move. That's just gonna like be a fast, impulsive move, like whether it be this or this, it's just all about knowing where you're gonna get in, right? But in trying to be a swing trader and trying to journey to be a swing trader, I've learned that it's hard to just swing. And then, it was mentioned the other day by Skag, where he was just like the most like the number one reason why people fail is because they don't realize that they should be a little bit of everything. They should be a little bit of a scalper. They should be a little bit of a intraday trader, and then they should be a little bit of a swing trader, because you can't solely live on just swinging. And reason being, especially if you're just doing this just for a living, and just trading and only living off of this, you would have to know how to manage all your money. Like, I know he has some scalps just to cover his swaps for his swings. Because if you're swinging a pair that's taken like 2 weeks to go full on, the swap is going to add up, especially if you have a high lot size on it. Your swap could be like $100 something. So he can have scalps to cover his swaps, and then intraday trades for compounding to actually gain some money and take profits so that he can withdraw by the end of the week. And then, stacking onto swings. That's where the intraday comes in. It's not really about, not like, just saying, okay, I'm going to skip out on everything. Like, learn how to, this is our biggest mistake, learning how to use those parts of the market to our advantage, because most people say stay out of it because you don't know how to trade it. You don't know when to get in it and when to get out of it, right? And if you're just trading in a range, you obviously know that it is going to be just within, pretty much two ranges of support and resistance, right? Like this, or somewhere in here, right? And up here, right? You can tell this formed a range. But knowing exactly when to say, okay, I'm going to go ahead and sell it here. You know, it hit again. I'm going to go ahead and sell it again. But knowing that, okay, it might not go all the way down here, you know, because that's the big mistake that everybody has a lot where, okay, I feel like it's going to make the whole move and then it doesn't make the whole move, you know, and so then you get greedy and then you end up losing because you're up 30, 40 pips and you didn't take it, or you didn't, you know, take partials or whatever. You didn't secure the trade, and then your winning trade becomes a losing trade, you know, and that's not what it's about. Um, it's about making sure we make money at the end of the week and making sure we're making these withdrawals, right? So, getting into it, just like Josh had mentioned, and make sure you're following your plan and stuff, because I don't know if I mentioned this already also with Summer. I did mention this. When Summer took her first trade, you know, she was excited and I was like, oh dang, it was a losing trade. And she was like, no, it actually hit my take profit because I had, you know, a 20 pip take profit, right? So that is what had me thinking like, okay, you know, somebody's losing trade could be somebody else's winning trade, just because that person who won decided not to be greedy and decided to follow a plan that's going to compound their way, especially if you have a small account. Okay, if you have a small account and you're really trying to build it, like, yeah, you know, take your money and go compound it, flip it, you know, it just makes sense. So all right now we're on gold. Now gold kind of I missed this first gold at 1445 because I know I have been having that, right? And I also had this one, but this is the one that triggered from right here, right? So let me see. If I put it on the 4 hour. $14.45, 14.46-ish. 14, okay, there it is, 14.45 something. All right, so right here, yeah, in that one red candle, this one, going back to the daily. Now, I'm gonna show y'all how I mark up my zones, because for basics and marking up support and resistance and zones, that's gonna be important. Okay. All right. So y'all see that at the wick of the daily candle of this move right here, the little Q move that we always talk about, right? Bullish, bearish, bullish. Give me 1 second. You mute yourself? Okay, cool. All right. Hey, little pup. Look like you have a little puppy right there. I thought that was a puppy. That's fun. All right. Right here. This wick right here, that's where this would have activated and it went straight up, right? That's crazy because I had this one marked up previously, but then I took it off because once I saw this strong bearish movement, I really thought it would go all the way down here into this strong bearish candle that pushed, you know, pretty much This was like a area of money, okay? Push the market up. And this, I still kind of feel like it would still go back down here eventually. But for now, this looks like a bullish run. And we're heading up into this area as well. So don't forget, you have like another cube area here, which is the inverse, right? This is a continuation pattern, okay? These patterns right here are continuation patterns, the ones that I'm showing you. The 3 candle stick pattern, bearish, bullish, bearish, it's a continuation pattern, all right? So you would have been able to go here and take this, right? Like that I'm cool with that. You know, that is 270 pips, right? If you're looking on higher time frames and you're looking for candlestick patterns, it's going to help you see where you are at in the market, right? Right now we're in a correction. It's getting bullish. We had equal highs right here. I know Gold Club called a buy around 1473 earlier, so they're up. But I do feel like this does have to finish this little correction, keep continuing up, maybe into here before it drops. Okay. So looking at this in a retail pattern, what would this be forming? What type of retail shape would this be forming, right? I put 2 trend lines here. Why did I put 2 trend lines here? What is this forming? Uptrend. It is uptrending for now. Yes. You think it's going up to 14.99 before it falls? Yes. A wedge. All right. Yeah, it can be called a wedge. Yeah. In simpler terms, this portion is a channel, right? When you put 2 trend lines parallel to each other, you create a channel. And a channel is simply price bouncing off back and forth, which can also be considered like consolidation or correction. You know, any of these terms can be used for this, okay? But the pattern that I was looking for is a bearish flag, okay? Bearish flag. Let's pull out our Fibonacci, right? Measure from the high to the low on this movement, okay? You see that it from here to here is retracing. Where can this possibly retrace to? You know, we have this candle up in here in this area. Our Fibonacci is literally just a measurement tool. It's not something for you to be scared about. It's not something for you to be nervous about. It's literally a measurement tool. You're measuring an impulsive move. This huge drop right here is an impulsive move, okay? This is what you're measuring. And then what it's going to measure is the pullback. You know, that's everybody's biggest thing. Like, oh, where does the pullback end? How do I know when the pullback is over? How do I know when it's ready to go? How do I know when I can get back in? That's what the Fibonacci is going to help you do. Measure that pullback, okay? So you see this correction happening here. You already know one of the golden ratios is 61.8, okay? This could be one. But we also know that price likes to bounce into the 71 and 78. Okay, those are 2 very crucial areas on the Fibonacci. All right, so what do? You can box it out. You know, box it out. Now this little box here, let me see. That was, I was showing you the little 3 pattern continuation, right? Let me remove that so it doesn't confuse you. Now, boxing up that 71, 78 area, what does that look like it will be getting into? An area of what? What does this look like right here? This long, bearish candle selling action. What is the name for this bearish candle? What would be a different name for this long bearish candle? No, I'm looking for more retail, like, no, not institutional, none of that. I'm just looking for simple terms that you should know. A bearish what? Bearish engulfing candle. Okay. Bearish engulfing candle. In this long bearish engulfing candle, you see no buying action, right? So if we can see price potentially push up to here, it would be filling a gap area in the market, right? Why? Because the market has to be balanced. The market has to, at the very least, give you back 50%, at the very least, okay? That's how you always know, okay, that, you know, the pullback is here. Once you see it at the 50, that's when you start paying attention. Pay attention to what is price going to do. Is it going to start rejecting right here? Giving you little, you know, wicks here, long wicks here, and rejecting, and then finally drop back down. And you can use your Fibonacci for targets, okay? Like, okay, let's say rejected here, boom, TP1 here, boom, TP2 here, boom, TP3 here. Like, this is another reason for you to use Fibonacci. It's not simply just for entry points, it's for target points too. Okay, so that's how you know. And then if you line them up, like let's say if you line it up, you can pretty much see that they are support and resistance areas. Okay, and if you don't know how to find TPs and targets, that's all you're looking for. When you're looking for TPs and targets, you're just looking for areas of support and resistance, areas where the market stopped, areas where the market just flew past and broke out of. Like, that's what you're looking for. You see a whole bunch of rejection? Okay, boom, I'm going to TP right there because I don't know if the market's going to go any further. You know, take your pips and go, pretty much. You know, and that's why you can have your TP1, TP2, TP3. You know, that's just potential targets. It doesn't mean that you have to get all of them, right? So I do still want to see this push up at least into the 61.8. If not, up here for sure. Because this is right here, this gap that I was talking about is imbalance, is what I'm talking about, right? Imbalance, it just means that the market is not balanced. The market has to have a balance. It can't just continue selling off forever and ever and ever. No, we have to make sure that people buy it back up so they can continue to sell. That's the way it works because you want it at a premium discount. Is everybody following? Are y'all following? Drop a number 1 if you're following me. All right. Cool. So we have this long impulsive move, bearish flag correction. We can definitely flags, I mean, they don't have to be a perfect, you know, in a perfect way. Flag is just literally just impulse correction and then a breakout. And this would be beautiful if it went down here, but I don't know. Straight into this daily candle that I've been waiting for forever, right? It's a lot of money there. It has never been mitigated out of yet. This one finally has. Now I feel like it's time for this one. So I'll definitely like to see that push up, huge drop, and then, you know, bring us into a huge buy again. Now looking into, no, it has a lot of lines and crap. But looking into the weekly, like I said, I was gonna help y'all find your zones. You could do this on the weekly, you could do this on the daily. I personally do it on the weekly because I feel like it helps with knowing where you could be trading within from week to week. Sometimes it may take 2 weeks, that's okay, but you know, on a weekly basis, where can you trade within, right? So you simply like, I know you're not like really seeing the candles and you can't really see the actual opens and closes, but that doesn't matter. What matters is looking at where's the wicks, the rejections, the breakthroughs, you know, that's what you're looking for when you're looking for these weekly zones. And these weekly zones are going to pretty much be extremely strong support and resistance areas. That's how you have to look at them. Extremely strong support and resistance areas. Okay. All right. You see how it went straight through. Strong resistance, strong support, strong support, strong support. A lot of rejection in this area, right? It doesn't have to be perfect. You don't have to get all the wicks. You want to just see a lot of reaction within that zone, a lot of touches in that zone, right? And as you can see, price has always come back into that zone, right? So that's one. All right, that's two. If you can see, boom, boom, right here, right here. You know, a lot of rejection here. You know, or what some people like to call fake out, fake out. It doesn't matter, whatever. It's just, you know, captures a liquidity. Rejection, 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 rejection. Boom, breakthrough, right? So you know that's a strong zone. All right. Now getting closer into it, I'm gonna erase this just so that you can see better. You can draw that back up. Okay. On the weekly time frame still. All right. You can pretty much count the highest high of this year as a strong zone. Oh, 1555. Right? Around there. Look at that. Rejection, 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 rejection. Right? So it's a very strong zone, which is why you saw that price had a reaction here. Price reacted way back here in the past, then it's most definitely going to react here. Okay. And if it makes it easier for you, like it does, Draw your chart out however you can understand it. It doesn't matter if you feel like it's too busy. It doesn't matter if you feel like it looks like too much. Like, screw what people think. Do what works for you. Do what you can understand. So if it helps you to do these little circles so that you can see, okay, yeah, this looks like a strong zone to me. Like, I can definitely see this being a hot area for price to have some reaction, then do that. Because it's about understanding what you're doing. Okay. And it's about not being lost in the market. You gotta understand what price is doing in order for you to know what is going on. You can't just be guessing prices here and guessing, okay, I think it's gonna go up or I think it's gonna go down. Like, this is not a guessing game for sure. It's not. Y'all gotta know these things. Y'all gotta know the terminology. All right. So another thing that may help too is putting a horizontal line where current price is at. Putting a horizontal line where current price is at. That way you know where you're at in the market. So if I'm on a weekly time frame and I have a horizontal line on where price is at, what does that look like to you? Does that look like a good trade setup to you? Does that look like price is in a very nice area on the weekly? Does it look like it's at a hot spot for me? It's within the zone. It's within a lot of rejections. It closed down and came back up. It didn't really hold. So it's going to be interesting to see what happens, right? These are the things that's going to help you make a decision on what you want to do with the market and where you want to take it. All right. Okay. So you definitely want to see how price reacts here within this area, right? We definitely already see that there are equal highs here. Boom, boom, boom. Lots of them. And then you want to identify if you've already taken out equal highs or equal lows previously, which you have, right? You've taken out these. Now it's time to come take out something recent. So it's definitely going to want to move into this, clear that out. This is that imbalance area that I was telling y'all about. Oh, I'm about to run out of time again. Got 9 minutes left. And it's pretty much within here and here. If y'all can see that. This is the last wick here. This is the last wick here. So it's within here. That would be nice to see. Do y'all follow me for gold? Y'all get that? Y'all see that? Right? Boom, boom, within here. Everybody good to go? And it could do so many other things, you know. It just really depends. But use your tool to measure. Can measure the retracement, you know, go on this bullish run, and then start hitting these targets. Okay? And then just put horizontal lines on them. That way you know. Follow your trading plan. All right, let's see. Anybody have questions? Questions? None for now. Okay. All right. I'm upset because I had these. Let me see. I'm waiting on this. I'm waiting on a few things for these. Possibly into here or here, and then a continuation up. You know, this is where we're starting to see prices reaccumulating pretty much. You know, we had this accumulation phase for GU, and it came up, broke a lot of structure. So I think we're just reaccumulating here and waiting to continue up. But GU is just kind of up in the air because it has a lot of stuff going on with it. Yes, Summer, definitely mark it up the way you know best how to mark it up. Everybody marks up differently. You know, everybody's looking at something differently. Whether it's smart money, retail, whatever patterns, head and shoulders. Just make sure you're drawing everything out correctly. Make sure you're drawing out the patterns correctly. You don't want to be, you know, doing the wrong thing and making the wrong move when it comes to that. Yeah, I definitely want to see it come down. No, it has some gaps somewhere besides this one up here. There's another one. But I have this. I did go over EU last week with Steve when he came over, and I told him EU was going to finish strong last week, and it did. And I did not take my own damn trade. I don't know why. But nonetheless, it did what it did, and price went up. And yeah, I am waiting for this to finish reaccumulating as well. I was hoping for it to come down here, right? And then it had this bullish reaction again, but that's okay. Missed that. Then it was just a little, like 20 pips, which is fine if you're doing a standard lot. That's like an easy $200, right? So it's just all about knowing where you are in the market. Okay, this will definitely probably move a lot more tonight. It's definitely going to retrace a lot more in order for it to come back up. And I'm not sure what the dollar is doing right now. Hold on. This is what I had for the dollar. Marked this up earlier. But It's probably not. Dollar seems to be fading out. I don't know if it's gonna actually make it to back up here to keep going down. I was just pretty much projecting for it to go back into the top of the range of the channel and then drop again and finally break, but we'll see what it does right here. That way we can kind of see nothing's really correlating right now is what the educators are saying because of market conditions. Like, since they're a little wacky, not, the dollar's not really going to correlate with much right now, and the other pairs are not going to correlate with each other either. So don't try to look for correlations in the pairs. Just try to individually look at everything, and that should help. Is there anything y'all want me to address or go over before these 2 minutes are up? Anybody? Y'all good? And if there's another pair that y'all want me to go over, y'all need to let me know. That way I can drop another link. Or if y'all good, let me know. I don't know what time it is. I know. Oh, it's 10:30. I think Ziggy, Jiggy, Ziggy, Jiggy and Sakar are on, huh? If y'all want to go watch that. All right, guys. Well, y'all have a good night. Thank you for hopping on. It's been lovely.